Welcome to Market Matters. This is Charlotte Chong and I'm Khoo Chong as usual presenting to you. Now the KLCI spent most of the day in the red but ended up higher by 1.5 points, closing at 1,623. But that was slightly misleading because overall though the broader market saw decline as Trump advances on a ratio of 3-1.
So it was in the red in the morning when I looked at it, 719 to 214. Now top gainers were Time.com, Tenaga and Inari. Top losers were Supermax, Top Glove and TAS, all the glove makers. Total volume at 1.6 billion shares, slightly lower than the normal market day, worth 1.7 billion ringgit. And reasons for bad sentiment throughout the region, not just Malaysia, more oil drops. I think oil dropped to about less than 30 US dollars a barrel. China market declines about 6.8% today, Shanghai Composite Index, and US Fed meeting coming up soon.
Yeah, concerns over another rate hike. And then domestically, of course, reports that Tabung Haji might not have enough reserves to pay depositors dividends and bonuses this year. And of course, the report that the Prime Minister has been adjudged innocent of the alleged Saudi donation of the funds. Let's move along to, I guess, the rest of the market where I think MIDF research in their weekly net funds outflow suggested that 834 million ringgit, highest in nearly, what,
17 weeks? 17 weeks.
17 weeks. Sorry, 17 weeks. Yeah,
but actually, MIDF said it deems the amount as under control, probably reasonable, given the continued outflow in this entire region. Now, up to January 22nd last Friday, foreign investors have sold a net of 2.21 billion this year, but if you compare it with last year, 19.5 billion for the entire year last year.
Exactly. Well, other than Tenaga, which actually helped the index to rise, the rest of the region slid. The Nikkei was down 2.5% to 16,709. The Shanghai Composite slid by 6.5% today to 2,750 points, and then the Hang Seng was actually down too as well, dropping 2.5% to 18,861 points. Hotstocks, Charlotte, APM Automotive Holdings Bhd. Now this, of course, is the automotive parts company. They've got stuff in Malaysia, Australia, Vietnam and Indonesia. They do springs, shock absorbers, basically suspension systems for automotives and the vehicle industry. And in Australia, of course, they also do radiators. They've been on a bit of a decline actually because in terms of the share prices, they are probably at their lowest in at least 4.5 years. They're down about 30% from April, I think. And it's actually not looking good from operating environment perspective.
So what happened is last week I attended some of the Automotive Outlook conference, and what Frost & Sullivan said this year TIV is going to decline 1.44% to about 680,000 units. And what MMA said is the same thing. This year is going to see another 2.5% decline, TIV to 680,000 units. So I think it's not looking very good for auto parts makers at this time of the year.
Absolutely. You look at the ringgit versus the dollar, and most automakers have to raise prices in Malaysia to counter the weak ringgit. And then, of course, sentiment is so poor, nobody's buying motor vehicles. In Australia, of course, hit by the Chinese slowdown. So it's a regional thing. It's not just a Malaysia thing. And you would really have to expect APM to try and support their earnings at this point in time.
For its third quarter ended September 15 this year, net profit actually down 57.6% to 9.7 million ringgit. Revenue down 12.3% to 255.8 million ringgit. And the reason why it went down revenue was because of lower offtake from OEM customers for certain models. That's what the company said.
Of course, this is also related to the Chong Motor Company, where the Tan family do Nissan cars in Malaysia. So to summarize, where APM is concerned, it's a tough environment with rising raw material costs and weaker sales across the board. Secondly, the regional markets in Indonesia, Vietnam and Australia are tough as well because growth is slowing, hurt by China. And thirdly, and I guess most disconcertingly for shareholders, the stock share price is at least at a 4.5-year low. Let's shift along to stocks with momentum, Charlotte, and it's called CCK Consolidated Holdings Bhd, pegged as negative momentum by the Edge Research. They closed the day up 7% to 120, and this is a poultry breeder.
So other than poultry, they do seafood as well, and their seafood segment is actually doing quite good. Their aquaculture farms cover an area of about 200 acres, and they have approximately 45 ponds in operation. And this company is very interesting. It is founded by Cebu tycoon Tiong Su Kop, and he owns actually 14.72% stake in the company.
Yeah, so unlike APM, this is a company which has basically been flying through these tough times. They've gained 40% to over $1 in less than 2 months following their Q3 results in November, and then of course they closed today at $1.20. Net profits are up by about 70% in the latest quarterlies. They've got better economies of scale. They have expanded their retail outlets. They've invested nearly 100 million ringgit in their core business of retailing cold storage products, and they've also got integrated poultry farming and processing. So they've made this whole chicken farming into a real science.
And also moving forward, it plans to expand its retail network to both Malaysia and Indonesia. Now, when we talk with third quarter earnings, increase in revenue was largely due to expansion by group via increasing stores. They are going to increase more stores in the region and also in Malaysia as well, trying to capture a larger market share in the region. Now, improvement in the performance also seen in seafood products, like what I said just now, contributed to better performance. Just a little bit more on its financial result, 67% up on its net profit to 3.9 million ringgit, revenue up 10.5% to 135.7 million ringgit in its third quarter ended September 15th.
And yet, it trades at a trailing PE of just 14.4 times, so that almost makes it a
I think Insider Asia loves this kind of stock, isn't it?
They do love that kind of stock. And they also process 20 to 25,000 birds per day, so if you want to get some bird processing, talk to CCK. To summarize then, CCK is reaping the benefits of earlier investing in their retailing and farming operations. They want to expand, secondly, in both Malaysia and Indonesia. And of course, thirdly, they expect the good financial performance to continue.